Okay, ever try to like dig through this giant pile of clothes and like, you're just looking for one sock?
Yeah.
It's super frustrating, right?
Oh, yeah, absolutely.
That's kind of what it feels like when you're trying to, untangle your business finances if you haven't kept them separate from the very beginning.
Right.
But it's so important to get this right, like
Right.
from the start,
Huge.
for your own peace of mind, but also for your business's potential.
Totally.
We're talking about, avoiding those tax nightmares,
Yeah.
protecting your personal savings, and actually attracting investors who can help your business grow.
Mm-hmm.
Now, I know it can be a little daunting,
Right.
but in this deep dive, we're going to break down why it matters and give you some super clear steps to make it happen.
It's interesting you use that analogy of a jumbled pile of clothes because when your personal and business finances are all mixed up,
Yeah.
it's really hard to see the true financial health of your business.
Right.
It's like looking for a needle in a haystack.
Exactly. And let's be real. Who wants to spend, all this time digging through that financial haystack?
Yeah.
Especially when there's some pretty serious risks involved.
Absolutely. One of the biggest is the tax implications.
Oh, yeah.
Not only can it make, filing your taxes a nightmare,
Mm-hmm.
but it could also increase your chances of getting audited.
Right.
And audits are not just time-consuming, they can be expensive too.
I have heard some horror stories from entrepreneurs who have gone through audits, and it sounds like something
Oh, yeah.
you definitely want to avoid.
Yeah, for sure. And beyond taxes.
Right. Yeah.
There's the very real risk to your personal assets.
Oh, wow.
So imagine this.
Okay.
Your business runs into some trouble,
Oh.
maybe a lawsuit or an economic downturn,
Yeah.
and suddenly creditors are coming after your personal savings
What?
or even your home.
Wow, that's scary. I never really thought about it that way.
It's a common misconception that just because you're a small business or a sole proprietor,
Yeah.
that your personal assets are safe. But if you haven't clearly separated those finances,
Yeah.
you're leaving yourself very vulnerable.
So basically, separating finances isn't just about being organized.
No.
It's about like building this financial fortress
Right.
around the things you've worked hard for.
Exactly. And that protection
Right.
extends to your business growth as well.
Okay.
Investors want to see clean, organized financials.
Makes sense.
They need to understand where the money's going,
Right.
how it's being managed, and what the potential return is.
Right.
If your records are all messy and unclear, it can be a major red flag.
You're right. It's almost like if you went to a restaurant and the kitchen was a disaster, you wouldn't be very confident in the food they were serving.
Right. Exactly. It's all about building trust and credibility.
Right.
And that starts with clear, separated financial records.
Okay, so we've established that mixing finances is a risky game. But how do we actually get to a place where our business finances are this solid,
Right.
trustworthy entity that investors and lenders will be impressed by?
That's where the power of building business credit comes in.
Okay.
Think of it as building a separate financial identity for your company.
Okay.
It's like giving your business its own credit score and financial passport.
I like that. Okay, that makes a lot more sense. But how do we actually do that?
Right?
Because that sounds kind of intimidating, honestly.
It's actually more straightforward than you might think.
Okay.
Especially if we just break it down into 5 key steps.
All right, lay them on me. Let's hear these steps.
All right, so step 1 is formally registering your business.
Okay.
So this could be as a sole proprietorship, LLC corporation.
Mm-hmm.
This step is really important because it legally separates your business from you as an individual
Right.
in the eyes of the government.
So got to make it official.
All right, step number 2.
So once your business is officially registered,
Mm-hmm.
you'll need to get an EIN,
Okay,
which stands for Employer Identification Number.
okay.
This is basically like your business's social security number. I actually remember that from when I first registered my business. I think I remember someone calling it a taxpayer identification number too.
That's right. EIN and TIN are often used interchangeably.
Okay, good to know.
Uh-huh.
All right, so we've kind of got the legal groundwork laid
Right.
with steps 1 and 2.
Yeah.
What's next?
Step 3 is all about opening those dedicated business bank accounts we talked about earlier.
Right.
Checking account for your daily transactions, a savings account to build a financial cushion,
Mm-hmm.
and a business credit card to start establishing that all-important business credit history.
Okay, so no more accidentally swiping that personal card
Right.
for business expenses.
Got it.
But what about actually building that business credit?
Yeah.
That's step 4.
You got it. So building business credit is all about proving to lenders and creditors that your business is reliable and responsible.
Yeah.
And a key part of that is working with vendors and suppliers who report to business credit bureaus.
So I'm guessing those credit bureaus keep track of things like whether you pay your bills on time
Yes.
and how much debt you have.
You nailed it. They collect data on your business's payment history,
Okay.
and then they use it to calculate your business credit score.
Right.
And that score plays a huge role in your ability to get loans, get favorable terms from suppliers, and even attract investors.
Yeah, so it's kind of like a financial report card
Yes.
for your business. Okay, that makes sense.
Yes.
But what if you're just starting out and don't have much of a payment history yet?
That's where step 5 comes in.
Okay.
Consistently paying your bills on time, or even better, early.
Right.
This shows financial stability and trustworthiness.
Okay, so good financial habits are key.
Right.
So we've covered, the risks of mixing finances and the 5 crucial steps to build business credit.
Yeah.
But what are some practical actions we can take right now to actually start separating those finances?
Let's dive into that.
Okay.
First things first, set up those dedicated business accounts.
Okay.
Checking savings and a business credit card.
Right.
Having separate accounts is like drawing a clear line in the sand.
Yeah. Between your personal and business finances.
Okay. That sounds like a manageable first step, but what about managing all those transactions?
Right.
And keeping track of everything? I'm already picturing stacks of receipts and spreadsheets.
I know that's where technology can be a lifesaver for business owners.
Okay.
There are tons of options out there like QuickBooks,
Yeah.
Zero FreshBooks, to name a few.
Yeah.
These programs can track your income and expenses,
Okay.
generate invoices, and even create financial reports.
So wait, does that mean I can finally ditch that shoebox full of receipts?
You bet there are also great apps out there
Oh, wow.
that let you scan and categorize your receipts digitally.
No way.
They will automatically extract all the key information and store it securely in the cloud.
So it's like this virtual filing cabinet that keeps itself organized.
Right.
Sign me up. But even with like the best tools,
Yeah.
there's still the human element, right?
Right.
What are some daily habits we can adopt to make sure those finances stay separated and organized? That's a great question, and I would argue that it's one of the most crucial aspects of separating your finances, because without discipline, even the best systems can fall apart.
Okay, so let's talk about those essential habits.
Yeah.
What's the first one we should be focusing on?
The first and probably most important habit
Okay.
is to never use your business credit card for personal expenses.
I can see how that would be tempting,
Oh, yeah.
especially if you're in a rush.
Yeah.
But I'm guessing those little slip-ups can have big consequences, right?
Absolutely. It can blur the lines between your business and personal finances, making it difficult to track expenses accurately,
Right.
and potentially even leading to tax issues down the line.
Right. It defeats the whole purpose of separating.
Exactly.
So what's another essential habit for maintaining that separation?
Paying yourself a regular salary.
Okay.
So instead of just dipping into your business funds whenever you need some cash,
Right.
set up a consistent paycheck or owner's draw.
Okay. I've heard the term owner's draw before, but never really fully understood it.
Right.
Could you explain the difference between that and a salary?
Absolutely. So an owner's draw is basically when you as the owner take money out of your business's profits for your personal use.
Okay.
It's different from a salary, which is a fixed regular payment, like what an employee would receive.
Okay, so is one better than the other?
It really depends on your business structure and your personal financial needs.
Okay.
For example, if you're a sole proprietor or a single member LLC,
Right.
an owner's draw might make more sense
Okay.
because your business profits and your personal income are essentially the same.
Yeah.
But if you have a more complex business structure, then a regular salary might be more appropriate.
Okay, that makes sense. So it's important to figure out which method aligns best with your business and maybe consult with a tax professional if you're not sure.
Exactly. And regardless of whether you choose a salary or an owner's draw, the key is consistency. Having a set amount that you pay yourself helps to create that clear boundary between your business income and your personal finances.
So it's kind of like setting a budget for yourself, but instead of tracking spending,
Right.
you're tracking how much you're taking out of the business.
Exactly. It helps maintain that separation and avoid those gray areas that
Right.
can lead to financial headaches down the road.
Okay, so we've covered some great habits,
Yeah.
like avoiding personal spending on the business card,
Right.
paying yourself consistently.
Mm-hmm.
Are there any other essential habits that we should keep in mind?
You know, one that often gets overlooked,
Okay.
but is super crucial for maintaining those clean, separated finances, is meticulous record keeping.
Right. We talked about using those apps for, scanning and organizing receipts.
Right.
But what else does meticulous record keeping involve?
It's about documenting every single business transaction.
Okay.
Think invoices, bills, receipts, bank statements,
Yeah.
even emails or notes related to financial decisions. Basically, anything that has to do with money coming in or going out of your business
Mm-hmm.
needs to be documented and organized.
Okay. I can see how that would be important for tax purposes.
Yes.
Is there any other reason why this is such a crucial habit?
Yes. Imagine this. You get audited.
Oh.
Those meticulously kept records suddenly become your best friend.
Right. Okay. So it's like building this airtight case
Yeah.
to defend your business in case of an audit.
It also helps you track your spending patterns,
That way?
identify areas where you might be overspending,
Right.
and make more informed financial decisions.
Right. Because without those detailed records, it's like trying to navigate a maze in the dark.
Right.
You have no idea where you've been or where you're going.
Exactly. Meticulous record keeping brings that much needed clarity and control to your business finances.
Okay, so we've covered a lot of ground in this first section.
We have.
We've explored the risks of mixed finances,
Right.
the 5 essential steps for building business credit, and some practical actions to start separating those finances.
Yeah.
We also talked about, the power of good financial habits,
Right.
like never using your business card for personal expenses,
Mm-hmm.
paying yourself consistently,
Yeah.
and maintaining those meticulous records.
It's all about laying a strong foundation for your business finances and setting yourself up for long-term success.
But let's be real, sometimes even with the best intentions, managing business finances can feel overwhelming,
Right.
especially as your business starts to grow.
You're absolutely right. And in those moments, it's important to remember that you don't have to go it alone.
Right.
There are professionals who can help you navigate those complexities
Okay.
and ensure that you're making the best financial decisions for your business.
You're talking about bookkeepers and CPAs, right?
Exactly. But knowing when to call in these pros
Yeah.
and understanding the difference between their roles
Yeah.
can be tricky.
Right.
Let's dive into that in the next section of our deep dive.
Okay, let's do it. Sounds good. Okay, so we've laid the groundwork for separating our finances
Right.
and building, that strong business credit foundation.
Yeah.
But you mentioned calling in the pros,
Mm-hmm.
like bookkeepers and CPAs.
Right.
I think that's where a lot of us get a little lost.
You're right. It can definitely feel a little confusing.
Yeah.
Think of it like building a house. You might be really great at, DIY projects,
Mm-hmm.
but you probably want to call an electrician for the wiring,
Right.
a plumber for the pipes.
Right. Different experts for different stages of the project.
Exactly.
But when it comes to like business finances, how do we know when it's time to bring in a bookkeeper?
Well, if you're finding yourself spending more time wrestling with spreadsheets than actually focusing on like your core business activities,
Yeah.
that's a pretty good sign.
Okay, so if those late nights reconciling bank statements are starting to take a toll,
Yes.
maybe time to bring in some reinforcements.
Exactly. Bookkeepers are great for handling those like day-to-day tasks, recording transactions, managing payroll, reconciling bank statements.
Okay.
They can really free up your time and your mental energy so you can get back to focusing on what you do best,
Mm-hmm.
which is running your business.
Makes a lot of sense. And what about CPAs? When do they enter the picture?
CPAs are more like financial strategists.
Okay.
They're the ones you call in for like the big picture things,
Yeah.
like setting up your business structure,
Yeah.
creating a solid tax plan, navigating complex financial regulations.
So they're not just like crunching numbers.
Right.
They're actually helping you make strategic decisions.
Yeah.
They can impact like the long-term trajectory of your business.
Precisely. They can also be super valuable when you're, facing major financial decisions,
Okay.
like applying for a loan-seeking investment or even planning your exit strategy.
So it's almost like having this financial mentor
Right.
who can help you navigate those like tricky crossroads
Yeah.
and avoid costly mistakes.
You got it. Now, I know some people might be thinking, but aren't bookkeepers and CPAs expensive?
Yeah,
Can I even afford them?
I think that's a valid concern, especially for, newer businesses
Yeah.
or those working with a tight budget. But isn't it like more costly in the long run to not have these experts on your side?
That's a great point. Think of it as an investment.
Okay.
Yes, there's an upfront cost,
Right.
but the potential benefits can far outweigh that cost.
Like, for example, a good bookkeeper can help you avoid those costly errors
Right.
that could lead to penalties
Right.
or missed deductions.
Yes,
And a CPA can help you optimize your tax strategy
exactly.
and potentially save you thousands of dollars.
Absolutely. They can also help you identify growth opportunities
Okay.
and make really sound financial decisions that can ultimately lead to increased profitability.
So it's not just about avoiding losses. It's
Right.
about maximizing your gains.
Absolutely. And here's another thing to consider.
Okay.
A good bookkeeper, or CPA, can provide valuable insights and advice. That can help you avoid those common financial pitfalls and make more informed decisions about your business.
Because they've seen it all before.
Yeah.
Right? They've worked with countless businesses and have a wealth of knowledge and experience to draw from.
Exactly. They can offer a fresh perspective
Okay.
and identify potential red flags that you might have missed.
That's a good point. So even if you're feeling confident in your own financial management skills, having those extra sets of eyes
Right.
on your books can provide invaluable peace of mind.
Exactly. And remember, you don't necessarily need to hire a full-time bookkeeper or CPA right away.
Okay.
You can start with maybe a part-time arrangement
Okay.
or even just consult with them on an as-needed basis.
Okay. That's good to know. It makes it feel a lot more accessible.
Right. And as your business grows, you can always adjust that level of support.
Okay, so we've talked about the when and the why of hiring a bookkeeper or CPA.
Right.
But how do we actually find the right ones?
Right.
Because it kind of feels like dating, to be honest.
Yeah. Haha. It can definitely feel that way. You're looking for someone that you trust,
Mm-hmm.
who understands your business,
Yeah.
and who you feel comfortable working with.
Right, because it is such an intimate relationship.
Right.
You're sharing all your financial details.
Absolutely. So how do you find the right match?
Yeah.
We'll start by asking for referrals
Okay.
from other business owners in your network.
Yeah, word of mouth is always a good starting point.
Yeah,
People are usually pretty happy to share their recommendations, especially if they've had a positive experience.
exactly. You can also check out online directories or professional organizations
Okay.
for bookkeepers and CPAs in your area.
Mm-hmm.
Many of them offer free consultations,
Oh, nice.
which is a great way to, get to know them and see if they're a good fit for your business.
That's a great tip. It's like a first date, but for your business finances.
Exactly. And during those consultations, don't be afraid to ask questions
Okay.
about their experience, their fees,
Hmm.
and their approach to working with clients.
So things like, what types of businesses do you typically work with?
Right.
How do you stay up to date on the latest tax laws and regulations?
Exactly.
Yeah.
You also want to get a sense of their personality and their communication style.
Because if you're not comfortable, communicating openly and honestly with them,
Right.
it's not going to be a very productive relationship.
So do your research.
Yeah.
Ask for referrals. Schedule those consultations.
Right.
And trust your gut.
Right. Because at the end of the day, you want to feel confident that you've found a team of professionals who have your best interests at heart
Right.
and can help you navigate the complexities
Yes.
of business finances
Yes.
with ease.
Exactly. Now that we've explored the importance of separating your finances, building business credit, and when to call in the pros,
Yeah.
let's kind of shift gears a little bit
Okay.
and talk about what this all means for you, the listener, on a more personal level.
I love that we're bringing it back to the individual
Mm-hmm.
because I think it's easy to get lost in the weeds of financial jargon
Yeah.
and processes. But ultimately, this is about empowering ourselves
Right.
as entrepreneurs to make smart decisions
Yes.
and build, successful, sustainable businesses.
You're absolutely right. And that's where things get really interesting.
Okay.
Separating your finances isn't just about compliance or ticking boxes.
Right.
It's about gaining clarity and control
Okay.
over your financial destiny.
It's like finally putting on those glasses
Right.
you didn't know you needed.
Yeah.
Suddenly, everything comes into focus.
Exactly.
You can see where your money is going, what's working, what needs adjusting.
And that clarity leads to better decision making.
Right.
You'll be able to track your profitability, identify areas for improvement,
Yeah.
and make strategic investments with confidence.
It's about taking ownership of your financial future
Right.
and steering your business towards greater success.
Exactly. And remember, separating your finances isn't just a one-time task.
Right.
It's an ongoing process. It requires discipline,
Yeah.
consistency, and a commitment to maintaining those good habits that we discussed.
It's like staying fit.
Right.
You can't just go to the gym once
Right.
and expect to see results.
Exactly.
It's about making those healthy choices every day.
And just like with fitness,
Really?
There will be times when you need a little extra support or guidance.
Mm-hmm.
Don't be afraid to reach out to a financial advisor or a mentor
Okay.
for advice.
That's a good point.
They can help you stay on track and make the best decisions for your business.
It's like having this financial coach in your corner,
Right.
cheering you on and providing expert insights.
Exactly. And remember, even small changes
Mm-hmm.
can make a big difference over time.
Right.
Start by implementing just one or two of the tips that we've
Yeah.
discussed today
Yeah.
and gradually build from there.
It's about progress, not perfection.
Right.
Even if you're not a financial whiz,
Yeah.
you can still take steps to improve your financial management and set your business up for success.
And as you start to see the positive results of those efforts,
Yeah.
the increased clarity, the reduced stress, the potential for growth,
Right.
you'll be even more motivated to continue on that path.
It's like that snowball effect,
Yeah.
right? The more momentum you gain,
Right.
the faster your business can grow.
Exactly. So we've covered a lot of ground today,
Yeah, we have.
from the risks of mixing finances
Mm-hmm.
to the practical steps for separation,
Right.
the importance of building those good habits.
Yeah.
We've talked about the essential tools,
Mhm.
resources,
Yeah.
even when to call in those professionals.
Yeah.
But as we wrap up this deep dive,
Okay.
there's one final thought I
Okay.
want to leave you with.
All right. What's that lingering question
Yeah,
that should keep our listeners pondering?
yeah. What's that one nugget of wisdom
Mhm.
they can take away and apply to their own business journey?
Okay.
Think about this. What area of your business finances feels the most overwhelming or confusing to you right now?
Great question. It could be taxes, budgeting, tracking expenses,
Right.
or even just like the thought of separating those accounts.
Whatever it is, I
Mhm.
encourage you to spend some time reflecting on that specific area.
Okay.
Do a little research,
Mhm.
read an article,
Yeah.
maybe just jot down your thoughts and questions.
Yeah. It's about taking that first step, even if it's just acknowledging the area where you need to improve.
Exactly. And from that starting point,
Right.
you can begin to formulate a plan.
Okay.
Break down those overwhelming tasks into smaller, more manageable steps
Mm.
and start making progress.
Remember, you don't have to figure it all out overnight.
No.
It's a journey.
Right.
And every step you take towards greater financial clarity and control is going to benefit you and your business
Absolutely.
in the long run.
In the long run.
Yeah, I think you're so right about that because, like, we tend to avoid the things that make us uncomfortable,
Yeah.
especially when it comes to money. You know?
It's true. The more we avoid it,
Yeah.
the bigger and scarier it seems.
Right.
But then when we break it down
Yeah.
into smaller steps and we start taking action,
Yeah.
it feels a lot more manageable.
Right. It's like that saying, a journey of 1,000 miles begins with a single step.
Yeah.
So for those of us who are ready to take that first step
Right.
towards greater financial clarity,
Mm-hmm.
what are some like actionable takeaways
Yeah.
we can implement like today?
Well, we've covered a lot of great tips and strategies.
We have.
But if you're feeling overwhelmed,
Yeah.
I encourage you to just pick one small thing
Okay.
and focus on that.
I like that approach.
Yeah.
Okay, so for someone who's still using their personal bank account for business transactions, what would be a good first step?
Opening that separate business checking account
Okay.
would be a huge win.
Right.
It's like the foundation for separating your finances
Right.
and creating that clear distinction between your personal and business money.
Okay, that's totally doable.
Mm.
What about someone who's feeling buried under like a mountain of receipts and has no idea where to start?
I would say download one of those receipt scanning apps we talked about.
Yes.
That would be a game changer.
Right.
It really takes the hassle out of organizing and tracking those expenses.
And it frees up valuable, mental space
Yeah.
to focus on other aspects of your business.
Exactly. And for someone who's feeling a bit lost when it comes to taxes, what would you recommend?
I would say schedule a consultation with a CPA.
Great advice.
They can help you create, a solid tax plan,
Mm-hmm.
make sure you're taking advantage of all the deductions you're entitled to,
Right.
and just answer any questions you might have.
Exactly. And remember, even if you can't afford to hire a bookkeeper or CPA right now,
Right.
there are tons of free resources available online,
Oh, yeah,
like articles, webinars, and even podcasts like this one.
that's true. There's so much valuable information out there.
Yeah,
It's just a matter of taking the time to seek it out.
exactly. And the more you learn about managing your business finances, the more confident and empowered you'll feel as an entrepreneur.
To wrap up this deep dive, I think the key takeaway is that separating business and personal finances isn't just a good idea.
Right.
It's essential for protecting yourself,
Mm-hmm.
building credibility, and really unlocking your full potential as a business owner.
Absolutely. It's about taking control of your financial future
Right.
and creating a solid foundation for sustainable success.
So let's ditch those messy financial habits.
Yeah.
Embrace the power of clarity and organization,
Right.
and watch our businesses soar to new heights.
Yeah, I couldn't have said it better myself. Thanks for having me.
Thank you so much for being here.